projects. So certainly very positive moving forward. No project would be successful without community engagement and a strong social license. And this is no different in the US. What is different though is this community is so ingrained with its history. They really want to see the socio-economic benefits of their mining return to the economy. So they have a very positive, supportive attitude towards uranium exploration as well as mining. The local paper quotes the uranium price each week, you can see back in 2022, the price was $45. It's now sitting at about 53 US per pound. So just in that 12 months, we're seeing a nice steady rise in the uranium price. We do have a local geologist and exploration team based there. They have worked in this Eurovan belt for some period of time, so bring a lot of general knowledge and local knowledge to the team. So the style of mineralization is referred to as salt wash. This is sandstone paleochannel mineralization, and I won't talk too much about the geology. Salt wash just refers to the sandstone unit the mineralization is in. What's very unique is the vanadium to uranium ratio. It's about 5:1. And the other thing is the lateral continuity of this style of mineralization. So the La Salle operation within Eurovan, I've seen myself, you can drive over 9 kilometers and just watch that seam to the side of you. So really laterally extensive. They do pinch and swell, the grade does fluctuate, but very laterally continuous. I think from those geos in the room, there's a lot of organic matter, so logs, fossils that have been replaced by uranium. So it's quite a nice area to work. Australian analogy would be the Bigelow deposit in the Nogalia Basin in the Northern Territory, and it's also a vanadium uranium style of mineralization. Since we've had the project over the last 18 months, we've been on the ground doing some sampling, grades of up to 1.25% uranium and vanadium up to 3.4%. There's a lot of historic workings, like I said, they just stopped mining, they're not depleted. So as for our first maiden drilling program, we targeted 2 areas, Rimrock and Groundhog, and looked along strike of these workings to see what the mineralization was along strike. And then we target a new area, section 23, that has no previous workings and no drilling to our knowledge. So we feel that although there's a lot of historic areas to follow up and to build resources on, it's looking at some of these new areas that also open up the potential. So that initial drilling program, we did downhole gamma post drilling, and then we selected a few samples to go off to the laboratory. And we found that we've got a great validation from those assays, validating the uranium and also highlighting a nice vanadium-rich halo around the mineralization. So uranium grades up to 0.5% uranium, vanadium up to 0.3%. And over at Groundhog, unfortunately, one of our holes collapsed, so we were able to twin it, and we got beautiful correlation between the two. Just moving into South Australia, at our copper projects, we have our Alfred East project and then 30% equity through Enviro Copper. We have Alfred West and Kapunda. These are large shallow copper oxide systems, and we're looking at developing them using in situ recovery. Just a highlight on the copper grades, 70 metres at 1% copper, 20 metres at 2% copper. So nice grades in themselves. But recently doing a review of our drilling, we were able to highlight some exciting rare earths. So this is potentially a new rare earth discovery for South Australia. The rare earth mineralization is within kaolin clays and associated with the copper oxide IOCG style mineralization. From my perspective, what's really critical or interesting is the potential size component of this system. We know that we've got a mineralization over 5 kilometers, but the Alfred copper belt extends well over 50 kilometers, and we know that we have some rare earths in these areas. We're now doing some mineralogy as well as metallurgical work on those rare earths, and we're looking at in situ recovery for those. I'm just going to zoom through. So just in summary, we're going to be busy over the next few months. In the US, we're flying a radiometric survey over all 3 projects, Drilling permitting is underway and should be on the ground mid-year with the drill rig. Drilling at follow-up at Wedding Bells, but also over at our vanadium project. And then SA, as I mentioned, metallurgical work, as well as sampling of some of the historic core to look at the rare earth potentials. You just have to sit down, Chrissy. Uranium, copper and rare earths, these are very high valued commodities with favourable fundamentals. Mining jurisdictions, good pipeline of projects, and I think, we have a modest market cap that I think has the potential for really being re-rated based on a discovery. Thank you.
Thank you, Nicole. Right, Justin Wood, make your way up here, sir. And as you do, a timely reminder, because you are one of my peoples that like to stay on the stage, perhaps longer than one has been allotted time. So we'll watch him. You've been put on notice. Justin is actually the co-founder and CEO of Noble Helium. They have 4 primary helium projects within the East African Rift System in Tanzania. Now that's an area that he knows really, really well because he has tasted success there, and a success that he wishes to emulate, to repeat with Noble. The company is getting ready to drill its first 2 prospects at its North Rukwa project next quarter. He says they have the potential to be company makers. Let's hear. Could you please make him welcome?
Thanks very much, everybody. And I've just turned it off. Brilliant. Okay, so this is what we have here is potentially the world's largest primary green helium reserve, and I'll explain what that means. So a little bit of education first. Helium is not just for party balloons and for blimps, it's actually a critical industrial gas that underpins effectively the entire global telecommunication systems. In the last 15 years, it's become critical to the manufacture of semiconductors, so all the phones and all the chips in our phones and computers and TVs can't be made without helium anymore. It's also essential for MRI machines, rocket launchers, and we've actually had SpaceX reach out to us to find out when our helium is coming online. So the market for helium is a global market. This is a wholesale market, not retail. So this is like long-term supply contract price value is around $5 billion and expected to grow over the next few years. There's plenty of room for us in this. I guess the reason we exist, or one of the key reasons, the drivers for setting Noble Helium up is a few years ago when we got started, we realised that the US was effectively depleting, if not the US Federal Reserve was about to run out, and the actors replacing it were Russia, Qatar and Algeria, and by the middle of this decade, those 3 countries will provide about 60 to 70% of the world's helium. So we feel that decoupling from natural gas, which is where 95% of the world's helium comes from, and also a whole new jurisdiction would be really useful for the security of the global helium supply. Since the US Federal Reserve ran out, there's been a move to market pricing for helium, and the price of helium's quadrupled in the last 10 years. So it's gone from $100 an MCF, which is what the US Federal Reserve was selling it at, to today it's $450 US per 1,000 cubic feet on long-term bulk helium supply contracts with like a Linde or an Air Products or the likes. That's 50 times the price of LNG, but effectively the same costs to go and find it if you know where to look. We are about to go and test our first 2 targets, and at that price we're looking at about $7.5 billion in the ground. So as Chrissy just explained, my background was I'm a geophysicist by training, but ran the exploration program for Hardman Resources in the East African Rift. We were bought by after the first 2 oil discoveries that I was key in proving, a key actor. Our partner Tullow bought us 6 months later for $1.5 billion, and they went on to drill another 40 exploration wells in the East African Rift. So there's hundreds of millions actually billions of dollars have been invested, 4 billion barrels of oil discovered in the East African Rift system since. And we're just applying all of that knowledge that previously wasn't available to exploring for helium in the rift basins of Tanzania. Sean Scott is our executive chairman. Sean is extremely valuable to me personally and to the company. He's a visionary. He was one of the architects behind the coal seam gas to LNG industry in Queensland, and took Arrow Energy from a $20 million company to a $3.5 billion takeover. I won't labour too much. Our anchor investor, Kent Masters, invested early in us a few years ago. He followed in. He's maintaining his 5% interest in the company. He's now the chairman and CEO president of Albemarle, the world's largest lithium producer. But I like to say that Kent's heavily invested in us, and I like to say the smart money's following helium. We're also working with two of the world's leading helium geoscientists at Oxford and Durham University. They built an atlas for us, so we understand the relative prospectivity of Tanzania, where I'm about to show you. It's extremely good. It's at the top of the list, but also we may want to look at other jurisdictions in due course. So we are here in Tanzania. It's the reason it's so unique and prospective is that this 2 to 3 billion year old Tanzanian craton, which has been building up an inventory of helium over 2 to 3 billion years of helium in the crust, is now being released through the act of rifting and extension and heating through the East African rift system. So we're seeing helium coming out of the ground here at up to 18% in hot springs. And the commercial cutoff in the US is 0.3%. This is a phenomenal helium generating system, and Chris Ballantyne calls it helium release on steroids at Oxford University. If we're successful here, this will be the world's largest primary helium reserve. That is nitrogen and helium only, not associated with hydrocarbons, which 95% of the world's helium is extracted from. Over the last many years, but actually, or more importantly, over the last 12 months, we've been engaged in a very active and scientific de-risking program. We've acquired a lot of geotechnical data and zoomed in on these two leads up here, or prospects now up on the western side of the basin, called Mbalele and Pagari. They collectively target 16.5 billion cubic feet mean of helium reserves. That's about 2.5 years supply if we were successful. And if we are successful, as I said, that's $7.5 billion in the ground. And the next structure to the south of those prospects, which we now have worked up, called Kachinga, very aptly named, is about $10.5 billion worth of helium in the ground. This is a phenomenal system. Mbalele and Pagari have been targeted because of their high prospectivity. We're seeing every evidence that we'll be discovering gas in the system. Those yellow dots at the surface where we will be drilling are helium anomalies in the soil gas. So we're seeing helium gas indications in the seismic, and we're seeing helium at surface. So we're pretty confident we've got gas and helium in those structures. That particular type of structure is called the basin margin fault closure play. That's the play that we de-risked the East African rift system with back in 2006 at Hardman. There's 14 of those being drilled now, and they've had 14 oil and gas discoveries since Tullow bought us out. After Tullow bought us out, we've secured the rig, so that's now getting ready to move down into Tanzania. We've also got secured an offer for a farm-in. So as we've announced recently, the farm-in partner, we've selected our preferred farm-in partner. They'll be paying up to $20 million to cover the costs of both wells, and also paying roughly $5 billion US in back costs to earn 50% in the project. And we're working towards bringing that to a conclusion rapidly because we need to. So we're chasing, I'll skip over the string of pearls, but effectively that's where if we prove one of these structures, there's a higher chance of them all working, and that actually has worked 100% in the East African rift system to date. If we're successful, and we think we will be, it's an easy path to market. We've got Blacktop Road all the way back to Dar es Salaam. We're in the Tanzanian national power grid, and Tanzania is about to double its power supply in 2025. So ample access to power, and also we're right next to a lake, so we've got water. So monetization shouldn't be an issue. If we find it, and we're actually getting approached from companies to help us with that already. If we are successful, this is the size of the prize that we'll be looking for, the project that we'll be looking for, roughly 850 million cubic feet a year. That's, by the time we come online, about 10% of the global helium supply. You can't see too close, the numbers are a bit small than the outcomes here, but if we invest $305 million to get to that, and we've modelled that, at 450 US dollars an MCF, we'll be producing about $340 million a year gross margin. So paybacks in about 10 months. We're currently at about 22 cents, $50 million market cap, and getting ready to drill. So if you haven't got helium on your portfolio, I strongly encourage you getting some. This is the right moment. Thanks very much.
God, I'll shake your hand for that. That was very impressive with your 6 seconds left. Well done, Justin. Congrats. Yes, think about helium, everyone. Then who knows what heights it could lift you to. We're talking with a gold explorer next with a great track record. Turaco Gold, the management team, has across several companies successfully generated shareholder value by making economic gold discoveries, proving up those discoveries before being acquired by larger gold companies, and then they've gone on and developed those discoveries into very profitable gold operations. So this is the MD of Turaco, Justin Tremaine, and he's going to talk us through their explorers' latest projects. Would you please make him very welcome?
Thanks, Chrissy, and thanks for coming to listen to the Turaco Gold story. It is a reasonably new story. We put Turaco together about 18 months ago now, on a very large exploration package across several projects, as I'll run you through, in West Africa and importantly in what we consider to be undoubtedly really the best jurisdiction in West Africa in Côte d'Ivoire. As Chrissy mentioned, the team behind Turaco Gold has had prior success in West Africa, not on one occasion but on several occasions, in taking a company like Turaco through grassroots exploration, through discovery, feasibility, and ultimately to a takeout by a larger company, which has been very creative value for our shareholders on numerous occasions. We like West Africa because we don't think there's any better place in the world for a junior company to be exploring for world-class deposits. So we're looking at multi-million ounce discoveries here. I think in the Birimium in West Africa, there's over 60 plus 1 million ounce gold deposits, and importantly, about half of them are over 3 million ounces. But importantly, for a company like Turaco and other junior companies, the exploration we're doing is low cost. So we're just doing shallow drilling, as I'll show you, which means we can define resources, large resources, very cost effectively, so in the reach of a company such as Turaco, and do it very quickly. And you've seen that happen on a number of occasions over the last few years. And as quickly as companies like Turaco make discoveries, they get taken out by bigger companies. We've seen another West African gold explorer get taken out today, Chessa Resources, at over $100 an ounce. Prior to that, Oklo at over $130 an ounce resource. Prior to that, the company that we previously ran, Exor, at about $150 per ounce. So these are very, very positive for our shareholders. As you can see on this map here, we have several projects in Côte d'Ivoire. In fact, we're the largest landholder in Côte d'Ivoire. And I'm sure it's well reported some of the security issues to the north in Burkina Faso and Mali. And what that's meant is some of the very successful companies operating up there, such as the Endeavours, B2Gold, West Africa Resources, Perseus, they're all really looking at countries such as Côte d'Ivoire as really their next leg of growth. So having the largest land holding there and several projects, one, diversifies our risk and increases our chances of making discoveries, which we're well on the way to doing, but also makes us, I think, quite strategically attractive in the medium term. So we've got 4 projects in the north: the Odini, Bundiali, Tonga North and Furki project. There's, turn this off. There we are. There's discoveries made at 2 of those projects, Furki and the Bundiali project. And then we've made another grassroots discovery, our team, at the Ibernia project in central Côte d'Ivoire, which I'll quickly take you through now. So this Ibernia project, it covers 2 granted permits, covering about 700 square kilometres. And those 2 permits are only about 15 kilometres apart. So we call it the one project, the Ibernia project. The Western permit, the Bouaki North permit, has only been granted less than 2 years. And so we've just done soil geochemistry there. And you could see on the left there in the yellow outline some very large high tenor soil anomalies that we haven't even started drilling yet, but we will get around to start drilling them over the next few months. Out in the east, in the blue outline, what we call the Satama permit, and that's where we made the Satama discovery, which sits within a 10-kilometre gold in soil anomaly on the edge of a sedimentary basin we call the Camo Basin, which actually goes up into Burkina Faso to form what's called the Houndé Belt, which is one of the best, most prolific addresses in West Africa. So a very, very, very good address here. And on that 10-kilometre soil anomaly, we've drilled the southern half of that, so about 4.5 kilometres of that 10-kilometre soil anomaly you can see here. And we've drilled now in just 12 months about 35,000 metres of drilling here. And that's why our team has been successful in the past, because we don't sit on our hands. We move forward very, very quickly. I'd say we're the most active explorer in Cote d'Ivoire, if not West Africa, over the last 4 or 5 years across Turaco and prior companies. And so we've drilled now 2-kilometre structure there of very continuously mineralised gold on 80-metre sections, so at resource definition stage now. And importantly, all that gold mineralisation outcrops from surface, and we've only drilled it down to 120 metres. So we've got 2-kilometre discovery here, just drilled down to 120 metres, but completely open. And in fact, the most northern hole we drilled here was our best intersection, which was about 26 metres at 4.8 grams per tonne, which you can probably see better here. What you see here is an IP survey that we did subsequent to the initial drilling, and that IP survey only covers the southern 4.5 kilometres of that 10-kilometre anomaly there, and that's defined parallel structures as well as strike extent potential to the north there. So we believe we're already well on our way to defining, you know, another plus million ounce discovery by another West African junior company. And you look at the valuations put on such discoveries over the last couple of years by corporates operating in the area, you know, we see a lot of upside here for our shareholders. And there's just the extent of obviously the drilling that we've done so far and what we've still got to go. So that's one project, the Satama project of multiple projects. And then just quickly touching on some of the other projects within our portfolio up in the north there. The Thurkey project, which was a discovery made by a previous explorer to us, a company called Toro Gold, which was an unlisted company that developed a mine in Senegal called the Mako mine, which was then acquired by Resolute Mining. And Toro did some exploration here and actually made a discovery in the few months before it was acquired by Resolute. So no work's been done since then. That was about 3 years ago. They did soil geochemistry across the permit, which is about 300 square kilometres, and defined 18-kilometre corridor of anomalous gold in soils there. They did some reconnaissance drilling, and you see these little black dots here as the extent of all drilling across that 18-kilometre anomaly there. And they got onto a discovery in the middle there called Warigi South. They only drilled 18 diamond holes here, and that's the results you could see from just 18 holes. It's not like they drilled a whole lot of holes there, and they're the select best results. Every hole came back with a spectacular intersection, such as 25 metres at 3 grams, 14 metres at 10 grams, 45 metres at 3 grams, and so on. You know, spectacular world-class intersections. But then the company was taken over and no further work had been done, and we're just about to pick up where they left off. So that's one discovery that extends for only about 300 metres, but sits within this north-south 10-kilometre soil anomaly that runs along the margins of some large intrusions that have not been tested yet. So over the next few months, we'll start stepping out from that discovery and testing that whole 10-kilometre corridor to the north and to the south, in addition to the work and the drilling that we're doing at our Satama project. So hopefully over the next 6 months, we'll see us emerge with 2 major discoveries. And then elsewhere, we're doing low-cost exploration across some early-stage projects. So the Odini project is in northwest Cote d'Ivoire. And this is quite important because this is actually the edge of the Sigiri Basin, which hosts most of the big deposits in Guinea, which some of you would have heard of. Most recently, predictive discoveries, Bankan, 4 million ounce discovery. And that basin, the edge of that margin of that extends into northwest Cote d'Ivoire. There's been no exploration in this part of the country whatsoever before. Newmont have just come in to this part of the world and farmed into some ground that is contiguous with us to the south there. But we have 2 permits here that cover the edge of the Sigiri Basin. We've only just started exploring it with geophysics, high resolution geophysics over one of those permits, and now permit-wide geochemistry, which has defined clearly 30 kilometres of strike of the volcanics sitting within our permit there. And that 30 kilometres has coincidental anomalous gold in soils. And then within that 30-kilometre anomalous corridor, we have 3 high tenor soil anomalies, and we just started testing those with the central one. And we got up to, just with auger drilling, which is just 6 to 8 metre holes. We just sampled the bottom of the holes. We got up to 6 grams per tonne from the bottom of those holes there. And that's just the first amount of shallow drilling that we've done on this very prospective project. And then finally, Tonga North, a very large exploration package sitting around Barrick's Tongan operation of a 1,500 square kilometre exploration package granted ground with several anomalies that have never been drilled, and we'll progressively drill them over the next coming 6 months, 12 months, 18 months. So a very active program. We've proven to our shareholders time again that we don't sit idle. We've done over 75,000 metres of drilling over the last 18 months, and that leads to discoveries and obviously creation of shareholder value. We're currently capped at about $20 million. We will be well funded as we're just completing a capital raising today. So look forward to some more news flow from the company over the next 6 months. Thank you.
Well done. Well done. He made it out. Okay, where's my last victim for speed investing? Here he comes, Black Canyon. You've done really, really well. We have one last investment opportunity. It may be the best one that you're to see. It's certainly a different topic. We're moving to manganese. We're having a 20-minute break for afternoon tea, and then we have a shorter session, an hour and a half. Okay, and you can bring your cups of tea and your bits and pieces back in. So we are talking Black Canyon, Pilbara-focused manganese explorer and developer, growing its mineral resource footprint, progressing manganese concentrate and high-purity manganese sulfate for the steel and EV battery sector, respectively. I sound like I've had a bit of a drink at halftime, but I certainly haven't.
Quite a mouthful, Chrissy. Thanks for
and
that.
This is Brendan Cummings. He's a really nice human being. Please make him very welcome as he provides us with an update.
Thank you very much. Yeah, bear with me before afternoon tea. That'd be great. So hopefully by the end of this presentation, I can convince you as to why you need manganese in your investment portfolio. So manganese is essential to steel, but also critical to the EV revolution. So before we jump into it, a little bit about Black Canyon itself. We actually celebrated our 2nd year anniversary last week, 2 years since we listed on the ASX. Look, it's a very tight capital structure, 51.4 million shares on issue. Most of the shareholders are, the top 20 hold 39% of the stock, so really strongly held. An experienced board, myself, I'm a geologist, been kicking rocks around the globe for the last 25 years, and chairman as well, a strong technical background with a geophysicist there, and also another geologist, Simon Taylor, and Adrian Hill, who's more corporate accountant, who keeps us on the right side of the law. So what is Black Canyon? There are really 4 key points to describe Black Canyon. We are manganese focused. As I said before, manganese is essential to steel, but critical to batteries. So we're not looking at any other commodities. We're sticking with manganese, that's it. Growth potential, we've already discovered 170 million tonnes at 10.3% manganese. It's a substantial discovery in the Pilbara region of Western Australia. And the Pilbara, it's a tier 1 location, multitudes of iron ore mines over there in the west, and it's a very strong jurisdiction. And I think at the end of the day, the big companies that are looking for these raw products are going to gravitate more towards Western Australia and to Australia as a safe jurisdiction where everything's known, the processes is known. We have 2 development options as well for the manganese. So we're looking at high purity manganese sulfate for the battery sector, but also traditional manganese concentrates that feed into the steel industry. So a bit of manganese 101. Manganese is the 4th most consumed element on the globe. 60 million tonnes of it's mined and transported around the globe annually. Most of it goes into steel, but there's an increasing amount of manganese going into the EV batteries, and that's probably a really exciting sector for manganese. The nickel manganese cobalt batteries, which are pretty much found in most of the electric vehicles on the road today, contain 10 to 60 kilos of manganese in them already, just in the battery, not including the steel. But there's also emergence of LFMP batteries, a lithium iron phosphate manganese battery, and then sodium-based chemistry as well that also have batteries, also have manganese in them as well. So as technology improves, we're seeing a lot more companies actually making manganese-rich batteries. And then Bloomberg estimate that out of all the battery minerals, manganese is the mineral that will be required more than the rest of them, and I'll show you why. Manganese being a critical energy mineral. So if you look at what's happening in the US, they've really been sort of sleeping at the wheel to some extent, and the same as Europe. So during this period of globalization, you've seen China doing what it does, and that is a manufacturing hub. And they've been quietly and quite efficiently producing manganese and other battery minerals out of China. And now we've got a situation where geopolitically there's a lot more drive to make sure that manganese and other critical minerals are onshored in other countries, and Europe and America are playing catch up to this extent. So those bottom pie graphs really tell it all. You can see where manganese is mined. It's mined all over the world, but in terms of its processing, cathode production and cell manufacturing, it's dominated by China. So there's a big push, and it's actually quite an aggressive push out of the US and with its Inflation Reduction Act to encourage manganese downstream processing in the country and Europe as well. And the reason being is the evolution of these batteries becoming more manganese rich over time. So what Black Canyon is doing in terms of high purity manganese sulfate is that we've already done a leaching test. We've got 91% extraction rate with crystallized manganese sulfate, and it is high purity. It's not quite battery grade yet, but we're currently working on resolving our battery grade manganese flow sheet. So we're certainly ticking the boxes in that aspect. What we're looking at is the potential to produce a small pit somewhere to develop a feedstock that can feed into the high purity manganese processing plant, and that may be located in Australia, could be in the US, or could be in Europe. That is really the strategy for Black Canyon to get into the battery sector. Just a sort of reverting from that now into what the assets of Black Canyon is in terms of manganese. I think the pictures on the right-hand side really paint 1,000 words. Manganese is quite widespread in the eastern part of the Pilbara Basin, and you can see the location there where we are, all the red and blue tenements. To the west of us, you've got the massive iron ore infrastructure, and then to the east, our neighbours around that district are also FMG, Rio Tinto as well. So we have a commanding ground position in the eastern Pilbara, 2,500 square kilometres. So the Balfour Manganese Field is what I'll be talking about next, and that's where the Flanagan Bore project is. So as the geo, I guess what gets you sort of excited in the morning is to go out and make discoveries, and we've been really fortunate, and it's been part of our plan the whole time to really put together a strategic package, and we call it the Balfour Manganese Field. The slides here do a bit of a side-by-side comparative with the Kalahari Manganese Belt, which is 25-30% of global manganese actually comes from this belt. So we've got a bit to catch up, but in terms of scale, I can certainly see the Balfour Manganese Field. We have a commanding position there, catching up. We've only ever had one mine being produced there at Nicholas Downs, whereas you look at the Kalahari, 21 odd mines. It's been going for 60 years. It's well mature. In the ground, the resources are about 37%. In the ground, we're 10 to 20%, but we can upgrade our manganese to 30 to 33%. Surprisingly, they're mining deep. They're mining 100 to 400 metres deep, so it goes underground, whereas out in the Pilbara, we're sort of 0 to 40 metres, so we're barely scratching the surface. Distance from port, 1,000 k's in the Kalahari, whereas in the Pilbara, we're 600 k's. They can use truck and train, and we're just using trucks. So we're hopeful that over time, we've already found 170 million tonnes at Flanagan Bore, and there are a number of other targets that we've got, the KR1, the Pickering targets as well. These are substantial 1 to 5 kilometre targets that we hope to drill, and also find more manganese and make additional discoveries. And the idea really is to show that this is a Tier 1 district for manganese. So we had early success at Flanagan Bore. That's 170 million tonnes at 10%, and we've managed to delineate a very massive resource there. Since then, we did a scoping study on that deposit, and you can see it has positive metrics, but I think there's more room to improve on that going forward, and we're working on improving transport and logistics aspects of that project as well. Really positive metallurgical test work, and I think the market's missed the point on this one, that we're able to upgrade 10% in the ground to 30 to 33% using DMS, which is a really consistent and reliable processing methodology. ESG also very important, so we're just embarking on that, and we're doing a lot of on-ground surveys, flora fauna surveys at Flanagan Bore, which will help gain our approvals later next year. So this year we're really looking at a twin parallel strategy, looking to produce manganese sulfate for the electric vehicle market, and also manganese concentrate, and these are the work programs that we'll be going through. So towards the end of this year, the high purity manganese sulfate piloting will be really important, and we hope at that stage we'll start attracting more interest from the battery manufacturers and also car OEMs. And then with large-scale DMS processing planned later in the year as well, that'll hopefully attract more attention from end users in the concentrate space. So really, bit of a quick introduction to manganese. I hope you've learned something from this, and if you've got any further questions, I'm at booth 82. I'll be there tomorrow, the next day, and more than welcome to come down and have a chat. Appreciate it. Thank you.
Thank you very much, Brendan. You're a very patient soul. You stood here or sat there for the entire session, listened to everyone else, and he's wrapped us up nicely with something new to learn. Question? We got it? The boys down the back, we've got our question coming up. So this is the latest in our little survey that we have for that hashtag. You can, oh, there we go. Well, that was the first one. So we were 67% are still saying gold. We got a number 2. No, we can't. All right, and that doesn't matter because we want to go to afternoon tea. So very quickly, what will be the best performing commodity over the next 12 months is your next question. Is it, we're still there? We're still with that? So we're going to go to afternoon tea. We've got 20 minutes. Please bring back your coffees and your teas and your bits and pieces in here. We've got a slightly shorter session, only an hour.